The Edgeless Horseman here. It's March 24, 2022. Today was a kind of exciting day for people in the mining space and gold and silver space, especially. Gold and silver ripped higher. Silver was up close to 4% at one point, and some juniors got really spastic. So some up 20% or so, some were down, some were neutral, and yeah, I mean, I guess the point of this video will be that just to harp on the fact that almost everything is noise, especially in the short term. I mean, a daily movement of a stock. I mean, take two junior stocks. One is up 20% today. Let's say another is down 5% today. How do you explain that? Assuming there was no news out. That's a 25% difference on no news. So I guess what I'm trying to say is that I would say 90 or more percent of probably more than 90% of the average action in any junior stock is short-term noise, short-term expectations, buys and sells based on short-term reasons, investors with short-term horizons, etc. So it's like, I don't think you should really pay attention to that. I mean, that's coming from the perspective of a long-term investor who actually wants to beat the market, not join it in its stupidity. And I thought this, on the subject of just patience, sitting tight, not over trading, etc. I think this article is kind of interesting in that perspective. The title of the article: Fidelity's best investors are dead. The customer account audit revealed that the best investors were either dead or inactive. The people who switched jobs and forgot about an old 401k, leaving the current options in place, or the people who died and the assets were frozen while the estate handled the assets. So to sum up, you would probably most people would do themselves a favor if they, died basically, and had a time horizon of forever. I guess that's a bit harder in the actual mining space because it's a finite industry. But I think it drives home the point that, I mean, most people are over trading, etc. I mean, if you're dead, you're obviously not looking at short-term noise. You're just sitting put basically. And if you had picked decent companies at least on average and had some diversification, you'll outperform probably 90-95% of investors. So this over trading and notion of having to do something every day. I mean, I get that. I mean, my background is from poker, for example. I mean, nothing happened unless I made a decision. So that was 100% involved action all the time. But this is not poker, this is investing. And there are different ways to beat the market than beating someone in poker, for example. I mean, it's at the end of the day, it's against human beings. So whereas in poker, only I guess 5% are actually long-term winners, and I think that's pretty much the same for investing. So I'm just gonna take today for example. I mean, yes, there were some big movements in some stocks, etc. I didn't trade anything. I barely traded my portfolio for the last 12 months, I would say. I mean, I got a lot of stocks, shares held up in private placements, or actually a lot of the private placement shares, they're already free trading, the majority, but I simply haven't done anything because I think they're broadly so undervalued that it's hard to decide. I mean, if your average stock is up or is undervalued by 66% or whatever, and they're gonna go up to 100% one day as a base case average. I mean, what does it matter if a stock goes up 5% and another 10% one is put? I mean, there's so much money still left on the table. It's really just noise, and you never know what stock can really go on a run either. So if you're actually trying to trade it, that's also hard, because I mean, typically when I try to be active, I tend to sell pops, let's say, and that might be the start of something much larger. And nowadays, I mean, I have evolved as an investor over the years. My portfolio looks nothing like it did just 5 years ago. I would say I have a very different strategy today than I had just say 2 years ago, or at least a better understanding of what the actual best strategy is. So, like I've said few times already, I think growth stocks are the place to be. I don't like mature companies. I don't like trading sardines. I don't like anything where you don't really get paid to wait. Because in a growth stock, you can have very bad timing the day you sell, typically. And you can still be sitting at a profit. If you buy a growth stock and it grows along your expectations, along your base case, maybe not blue sky scenario, but it still grows. So let's say you were lucky or keen or competent, or however you call it, to buy a growth stock at a bottom, and it keeps on growing. So let's say you come back 2 years later, and you haven't really checked your portfolio much, and you decide to sell, because when you check your portfolio, it's like it's been going down for a year or whatever, that stock. So maybe you sell at a sentiment low. Whereas a trading sardine, like I've shown many times before, I mean, that's already back to the same level pretty much. I mean, this bottom here wasn't higher than this, or this, or this. So if you have bad timing in a mature company, or in let's say a trading sardine. I'm not saying Strategic Metals, for example, is a trading sardine, but it's trading like one. And Bear Creek Mining, which is the purple line, has been a mature silver play for ages, basically. So that's more of a trading sardine. Nothing material in terms of intrinsic value growth has happened over many years. So it's been worth around the same amount, and it just the price of it changes with sentiment and metals, etc. So again, you don't get paid for any waiting, assuming you have worse timing or whatever. If you get scared and sell here, even if you made the perfect purchase here, you would have made no money. But a growth stock, take Cassier Gold for example, you see here that every sentiment bottom has been higher. So even if you chicken out here, but you actually at least bought low, let's say you bought here or whatever, you would still, even though you should be buying here, and let's say you do sell, you would still have made some money, even from here. I mean, it's not a big return, but at least it's something. And same goes for tops, obviously. It's like, okay, if you're greedy and or I wouldn't say greedy, but you buy here, then the coming tops, assuming the growth trajectory is intact, will be higher. The worst way to play it is obviously to buy high, buy at a sentiment high, and then sell at a sentiment low. So it's like, if you're along for this downtrend in junior sentiment, let's say, hold on for the coming, coming revaluation higher. It's like If you sit through this, don't sell here. I mean, in my opinion, it's like at least wait until you get back up here, because we're gonna go back up there. But and I mean, when I see a lot of people complaining about juniors, or that I'm you're always bullish or whatever, and typically they say, well, you've been saying that for the last 2 years or 1 year or whatever. So that tells me that a lot of those people, they got in near the highs. And if they see someone saying buy all the way down, and increasingly so after a 2 year period of down action, they get pissed off. Like, okay, you've been saying buy, but it's not my fault you bought up here. I've been buying ever since 2015. I simply ramp up my buying at sentiment lows, and typically, fortunately, I have tended to be in growth stocks. So if sentiment is low here, I tend to up my buying. If sentiment is low around here, which it was around this period, I ramp up my buying. So it's like you can be 100% long and 100% bullish, but you have to, I guess, know what you're doing, because these bottoms are higher. These major sentiment bottoms are higher and higher, etc. And that's not going to go for every company, obviously, but I mean, one of these, maybe it becomes a 5-bagger, so like plus 400%, and that's going to pay for 4 other picks that go to 0 with an equal sizing. But of course, which I've pointed out before, you will never have a multi-bagger unless you can't sit on your ass. So that's also the funny thing is, the short-term focus, and at the same time having the goal that I want to have a 10-bagger. It's like you can't have both. You can't have short-term focus and get a 10-bagger. So again, it's like, okay, let's get some perspective. Juniors are atrocious, grossly cheap still. I mean, they're incredibly cheap. And then we look at, okay, zoom out on the gold picture. Okay, it looks like we're around here relative to the earlier period. So broke out, made a new high, sharp correction, went up and then retested this breakout and then up again. So it's like, this looks like a big cup and handle, which one could say that this also was. I guess one could put it something like that, and that this is the cup and then the handle, and boom, breakout, cup, handle, boom, breakout. So it's like we haven't even begun the let's say, the frothy or rampant bull leg higher yet. So that's not, we haven't, gold hasn't really even begun to go crazy. And if we look at Newmont, I mean, this is a 35-year-old short, so it's basically touched the high from 1987. So what do you think is going to happen when or if / when gold breaks out here? You have majors making a 35-year breakouts, like mother of all breakouts basically. And this RSI, in my opinion, this was the start of a new era, and this is going to break to the upside. This big of a base is probably going to propel Newmont, I would say multiples higher in the future. I mean, it might take years, but it's like, I was asked on KU Report today, my exit strategy, and I, in a long-winded answer, typical of me, I said I don't really have an exit strategy because it's, in my opinion, way too early for an exit strategy. And we shouldn't really, I mean, it's nice to see that a junior can go up 5-10% on a day like this, for example, but it's like, we're so super early. First of all, we have to, in the junior sector, I mean, we're not even close to being at fair value, let alone what's going to happen when gold breaks out and major miners make 35-year breakouts from one of the largest consolidation patterns I've seen. So it's like, there's so much, in my opinion, room left for juniors if gold did nothing, just to catch up to where gold is right now. And then that's gonna, if we have 200% to catch up where gold is now, what's gonna happen when gold actually breaks out? And you see miners like Newmont making, mother of all breakouts. So it's like, uh, I don't even feel the need to think about an exit strategy, and moreover, short term focus. These are all very long term charts. I mean, uh, these are 35-year, and this is a monthly chart. This is a 35-year consolidation. These are multi-year patterns, basically. So it's like, why on earth would you have a short-term horizon and sit there and like, yeah, my junior is up 5% or whatever. It's like, I don't care what happens today or tomorrow, or if gold is up 1% or down 1% tomorrow. That's just noise. There's something much, much, much bigger in play here. I don't plan to need an exit strategy for years to come. And in the meantime, I'll just keep hodling basically these insane growth cases. And even if one day I have bad timing and sell at a sentiment low or whatever, I mean, I expect some of these juniors to have gone so high at that point in time that I can suffer a 30%, if I sell 30% from the top. That's what I like about growth. And again, it's like if I expect a gold bull to last all the way here, and you have some, you pick the juniors that have a growth profile that could last for, years. It's like, why even think about exit strategy? Or it's like, yeah, okay, Eloro pops up 10%. I mean, what does that matter when you consider how large their targets are? I mean, 10%, that's like 30 millions. That's nothing to Porco. That's nothing to Santa Barbara. I think we're, talking multi-billion dollar targets. And that's why I guess what I'm trying to say is like, if you factor in how cheap the juniors are, you shouldn't really be caring if even if Cassier Gold here. I mean, some juniors are breaking out already. So Cassier Gold is making I don't know how long. I mean, at least this version of Cassier Gold just broke out. Made a new all-time high. That's the start of something. It's like my old self perhaps would like to sell here, because okay, I finally got a pop or whatever. But I mean, my case for Cassier is also, I mean, they have I don't know how big, like 58,000 hectares or something, epizonal gold with bulk targets as well. So I mean, how many years that could grow, I have no idea. So I expect it to go something like this. And even if this is the base case, maybe blue sky is up here, maybe worse scenarios down here, and obviously if something really, really bad and the company went bankrupt, I mean, the gold isn't going anywhere. But it's like, okay, possibly any company could go to zero. But it's like, if I just hold on to obscene growth stories with a lot of potential, I mean, base case, I expect multi-baggers over the next years, and that's perhaps with no to little help from actual gold price, etc. But if gold breaks out, etc., I mean, the trajectories of these stories is gonna go like this instead. So again, that's what I like having a big margin of safety, have the best growth cases you can find where you can miss blue sky by like 70% and even perhaps have a poor market timing and actually end up selling 2 years from now at a sentiment low, and you can still be sitting at a profit. But the important thing is to sit, be a part of the ride, because we've seen that in Great Bear, for example. I mean, let's see here, where is Great Bear? Yeah, Great Bear Resources. I mean, I've shown this many times. Like, look at these swings. But that's a from discovery hold here, that's like a, yeah, 2000% return. I mean, even if you bought here, you would be sitting at a nice profit. Even if you bought here, you would be sitting at a nice profit. But if you time it with sentiment lows, I mean, the key thing is to sit put. I mean, a dead person, let's say someone bought Great Bear here and died, he would outperform almost any other trader in this stock. He would make more out of Great Bear than most people, simply because he didn't do a single thing. And now, and he was lucky, you know, sitting in a growth story that played out in a good way, of course. But it's like, again, if your case is a long-term case, which I think is the way to play the market, because the market is short-term focused. It prices in the next or next two news releases, while it does not price in the base case of the next 10 to 20 news releases. You can make a lot of money in this sector by doing very little. But it's human nature to try. We always want to be doing something. We always want to boost our return. We look at gold and silver, you know, the swings every day, and we you know, get excited if it's up, get downtrodden if it's down, or you know, depressed. But it's like, it's almost everything is noise except the growth trajectory of the actual company and its assets. And I mean, Galantas Gold also broke out today. Up, I think it ended up like 20% or something. And again, nothing really changed for Galantas Gold except, yeah, gold was up. It was like, there was no news release. So then you get my picture. It's like noise. And of course, a trader like, okay, nice, we're breaking out of our box. This is probably gonna head higher in the coming months. Yeah, that's sure, that's probably true. But it's like a value investor. Let's say you bought this low. I mean, when the trader makes, let's say, I don't know, 30-40%, whatever, this guy here might be sitting at 150% returns without even doing anything, because he knows he's going to win anyway, you know, on average, because it's so cheap that the path of least resistance is up. He's not even waiting for any particular breakout or whatever. So that's why I don't feel the need to do anything. Like Cassier, yes, it's broken. I don't have the short left, but you saw it broke out to all-time highs, etc. I mean, they haven't really even begun. That's a, you know, this version of Cassier Gold is a pretty new story. And this is a 15-kilometer trend. How much do you think is priced in, even if Cassier Gold appreciated, I don't know, $8 million today? What is $8 million in the grand scheme of things? That's nothing. Nova Resources, which everybody loves to bag on. I mean, I'm getting closer and closer to, you know, taking some money from some more conventional place to get into this value monster, basically. I don't think anything of this is priced in. Mill is 200 million. Newfound Gold shares, I don't know what they're worth today, maybe 80 million, something like that. Nothing is priced in. Now I'm more uncertain than ever of the short term horizon for Novo. But again, that's not, I mean, this is the big picture. What is priced in out of all this? Nothing, pretty much. And you can see the bashers in the forums. It's like all focus is on the next Beedens Creek operational update. All the focus is on that, and you know, the discussion is kept on that subject. But it's like, even if the next, I don't even know if, you know, the next operational update, for example, I mean, maybe it's already priced into the market, etc. So I think actually I should be buying more down here, just because even I am colored by short-term expectations in Novo, and that's you know, I think that I'm a good contrarian indicator in this case, that even when I'm a bit iffy on the short term, I think it's ridiculously cheap based on the long term. Newfound Gold, I mean, they have 2 10-kilometer trends up here. They just released some epic drill results today, and you can see, I mean, how much of this is priced in. They haven't even started down here. How long can they have a growth curve like Great Bear? I mean, they're at what 1.3 billion or something. So it's not like it's the cheapest play out there, but it's like, yeah, is this gonna grow? They have 14 rigs drilling. Of course, it's gonna grow, at least for the foreseeable future. It's not until I mean, uh, explorer of this caliber, it's gonna take a while until their growth potential starts to peter out. Let's say Dolly Warden, after the consolidation here, 5.4 kilometer gap. It's like, how many years of news releases can you see here? If Dolly Warden goes up 8 million tomorrow, what does that really matter if your investment horizon is 2 years? Nothing, really. It doesn't take a lot to drill up $8 million in intrinsic value. Other examples, I mean, SK Mining, my largest shareholding, in the forums, for example, you see, which is again typical, short term. Everybody or almost everyone's discussing the short term prospects and dilution and yada yada. It's like, this is this. I think this slide encapsulates drives home the point of just how a long-term growth story this is. What does it matter if SK goes up 20 million or down 20 million in one day? I mean, the potential in this picture alone, and this is just a part of their land holding. We're not talking $20 million potential per target here. This alone is worth, let's say, this kind of strike here could be worth anything from, it could be lower of course, but if we go by SK Creek, let's say 1.6 billion to 5 billion. So what does 20 million do for the overall case? That's nothing. I mean, if they make two discoveries, or they can line up this might be become a multi-bagger on that, and if they hit a few more, maybe they even get into a true East Creek type mineralization, then all bets are off. And who knows, maybe one of these will have an SK Creek type deposit. I don't think we need it even. So I think people are saying we need SK Creek style or type mineralization. I don't think that's true at all. It's like Skina is showing that their 4 to 5 or whatever it is gram per ton AU equivalent deposit is worth a lot, over $1 billion. So yeah, I mean, again, it's like, how many news releases can you see here? So the daily swings, etc., that's nothing, because this is a this is going to get tested, and that's going to take a couple of field seasons, I guess. And anything can happen. One discovery hole in either one of these could pack on hundreds of millions in implied value, pretty much, or at least tens of millions, etc. So these short-term swings means nothing to the overall case, in my opinion. So I have no. I mean, my reason to sell just decreases with share price going lower, because all of this is intact. Just when it it's down like 4% today after the private placement announcement. That's just 4% in discount on all of this, and much more on top of that. Yeah, Elora Resources. I mean, talk about a long growth trajectory. We have I think we have 2 or 3 holes into this right now, and there might be mineralization above this or above in places, and it's potentially even larger, because this doesn't look like it's cutting out. It's just the or the current reach, let's say, of the survey. So I expect, I don't know how many news releases I expect out of Elora. I mean, at the end of the day, that could be one of the largest deposits that's been found in decades. and we're certainly not pricing in that at 300 million. So this growth curve is right now based on the ROI they have. I mean, they're drilling obscene intercepts of mineralization, not a blank hole. So if in terms of pace of value creation, intrinsic value creation, Eloro is one of the absolutely highest, I think, in the space. So that's a true hodl case, because I think they're upping the intrinsic value of the company faster than almost any other exploration company out there, simply because the quality of the system, size of the system, and hit rate so far, and they have 4 rigs. So this is a long-term hodl. I mean, it's like personally, I can't believe that it's not higher already. But if I had to bet, I would bet that it's gonna break out of here and it's gonna go higher. So it's like until growth for Eloro starts to taper off, which I don't think is gonna happen for at least another year or two. I'm not selling, because I think it's just gonna go something like this. So again, it's like if Eloro goes up or down 10%, that's around 30 million in swing. That's nothing compared to what they're drilling right now. This is, if we just assume this is like a 1 billion ton target, just what's seen here, and forget about Santa Barbara and everything else, that's like a 64 million ounce AU equivalent target. What's 30 million versus that? Nothing. That's like a drop in the bucket. So it's like the daily swings. I mean, if you let's say you own Eloro and you sell because it's up 15%, because you're like, yeah, okay, that was a good trade or whatever. I mean, if you're a short-term trader, sure, I can understand it. But if you actually know what you own, I think you would realize that a 15% jump in Eloro is nothing compared to what Isca's potential is. So that's like, again, it's like trading for pennies, and that's what I kind of find it amusing. I have no idea who is actually defending this, but it's like, in my opinion, that's like the funniest selling I think maybe I will ever see. It's like, yeah, I'm gonna trade this. It might go down again. It might go down or have some kind of technical correction because there's a resistance zone. It's like, yeah, what you're afraid of, I don't know, it going down 10-20%, whereas it should already be up like hundreds of percent and probably gonna go higher. So I just find it amusing, pretty much. That I mean, I have no idea how anyone rationalizes selling here, unless they have absolutely no idea what Eloro is doing or what Isca is, and they are just looking at a resistance zone. Nevada King, I think that's up 10% or so today. Again, it's like, what's 10%? That's around $8 million or something. What's that compared to all of this? What's that compared to even the Atlanta gold mine? I mean, that's nothing. That's chump change. Timberline up on good results today. 40 meters of like 4 grams per ton. A nice Carlin hit somewhere around here. But if you look, I mean, they're drilling this part. All this is left to drill, really. So this could be years of growth ahead. And now they, when they understand that, okay, diamond drilling is a much better gauge of grade, so they'll be doing more of that, I think. So this could be a multi-million ounce deposit in give it 1 or 2 years, and that's going to be worth multiples of what Timberline is valued at today. So I don't expect their growth curve to start tapering off for quite a few field seasons yet. So growth trajectory up. I'm sitting and holding because again, I want to be a part of the Great Bear stories, and then even if I shit the bed or get scared here, if I held on from here, that's still a really good return. That's 100% return over 1.5 years, let's say. That's good, even though it doesn't sound like it. If I buy low, like uh, when juniors are low, like right now, obviously you would be sitting at way higher returns, and you can afford even worse timing, let's say. So again, it's like uh, I think train yourself to realize what the case is all about, what is actually important, and always figure out or keep in mind if you have a long-term case, uh, then your your price target is not this. Let's say it's up here. So everything up until that is just free risk adjusted upside until proven otherwise. So you'll just naturally get more bullish as long as the growth trajectory is intact. Goes down, you buy less up here, but if it's still intact, I mean, if you bought here, you're still sitting at a profit here. So it's like you don't have to be a perfectionist, and that's I think one thing that typically tends to happen, especially around bottoms, because well, not today, but it's like just a few months ago when juniors were lower, people argued with me about buying because they said it could go lower. And now all of a sudden there's less arguing about it going lower. So you see what my point is. It's like an opportunity is absolutely the best. Uh, People still don't look at the big picture and they just look at price that it could go lower. But like any of these stocks can go lower. I just don't think A, they should, and B, they'll go a lot higher. And again, it's like I don't have an exit strategy for any case really right now. It all depends on what happens in the future. It all depends on when the growth trajectory peters off, let's say, and compared to price. Because if my base case is that this will be the intrinsic value of Eloro, I think it's going to actually be a lot higher than that. But it looks kind of stupid, as if I think it's already worth this much, let's say. So something like that. But anyways, like if Eloro was trading up here already, and my base case, what now? Let's say up here, and my base case for Eloro in a year is up here, then that would obviously not be super good returns, and it could still reach that and it could still go something like this. But that wouldn't at all be as good of a buy as down here, obviously. So just to wrap up again, long-term horizon. In my opinion, focus on growth because that's going to bail you out anyway, even if you have bad timing. And the trick is simply to forget about the short term noise, and short term can be weeks, months, especially days, and up to years even. But it's so hard for people to do because we want to look at gold and say, I mean, what does it matter? What does it matter for Great Bear if gold was up 1% or down 1% here? Maybe gold was at the same price here as it was there. So this is the signal. It's the companies. You're investing in companies. You're not investing in gold and silver. You're investing in companies, and the news releases out of the companies, the value creation of the companies is going to trump the action in the gold and silver prices. So again, focus on what is important. What gold and silver is doing today is not important. If gold goes down today and brings down Timberline, that doesn't change anything in this picture. It doesn't decreases the results that are going to come out. I mean, if silver is down 2% today or up 2%, what does that matter in the grand scheme of things? Let's say, again, silver goes down 2%. I mean, this is going to take years to drill, might be worth billions, might, I'm not saying it's gonna be, might be worth billions. Who cares what gold or silver did today? But everybody else is thinking like that. Everybody else, if you see gold and silver up, typically the juniors will be up. Again, some juniors were up 20% today, some were down. You can't explain that other than, you know, the mood of the day in any particular stock. And especially if there's little sellers out there because nobody's in this sector, you're gonna have these spikes when we start out from such low levels. As always, this was a long rant, but it's like main point is I think it's best to just pick solid growth stories, diversify as much as you need in order to feel comfortable just sitting put. I mean, I barely watched gold today. I looked at share price of like, I don't know, 8 companies out of the 40 or so I hold. Like, this is so early, it's not even, I'm not even tempted to take profit in everything is still no-brainer cheap, brain dead cheap. Come back in like 200% and you know, we can see where gold is and what the intrinsic value of the companies are. But we're far away from that yet. So again, focus on what's important. Don't look at the short term, that's noise. Don't look at the metals, that's noise as well. This is not noise. This is not noise. This is not noise. This is not noise. Etc. Okay. Thanks for listening. Bye. And by the way, I'm biased. I own shares of all companies mentioned, I think. And I'm sponsored probably by most, if not all of them. And think for yourselves. Always know what you're buying and why you're buying. And yeah, don't buy anything just because I'm bullish on it. I mean, I don't expect to have a 10 bagger in every junior I'm investing in. It's just that the ones that does become multi-baggers, given enough time, they are gonna pay for the ones that doesn't do well. But in order for a company to become a multi-bagger, you have to sit in it for multiple years probably. And one last thing on that. Oh God, I forgot actually. Oh, I had a very good point. Anyway, I hope you got something out of this video. Thanks for listening.